Hi everyone. In this week's market update, we'll cover everything from banks, macroeconomics, crypto regulation, and impact on prices. Let's start right away with a focus on the current money flows in banks. Deposits at US banks outside the largest 25 fell by $108 billion, while deposits at the top 25 banks rose by $120 billion. US commercial bank deposits are declining at a historic rate, along with the M2 money supply, which is declining for the first time since 1938. Now, there's a possibility that the Fed's tightening could lead to deflation, reducing money available for spending and risking a severe economic downturn. And while the government and the Fed may prevent deflation, there's also a risk of too much money leading to high inflation in the future. For investors, this means as the Fed comes closer to the end of its hiking regime, the large macro factors affecting the various asset classes, bonds, stocks, real estate, and crypto, could start to wane. If and when the Fed eventually pivots, whether it comes later this year or next, this could be a boost for crypto, as it would lead to a more risk-on environment. Moving on to crypto, with some quick regulatory actions this week. The CFTC filed a civil action against Binance for regulatory arbitrage, plus operating a derivatives exchange illegally in the US. Allegedly, US investors made up a large percentage of trading volume. However, the suit focuses on issues between 2017 and 2020, and none of the actions are criminal in matter. Rather, they are more compliance-related, but more actions will likely be coming. Out of last week's slew of regulatory actions came an SEC Wells notice for crypto behemoth Coinbase. The Wells notice is targeting certain digital assets, whether they are securities or not, their institutional offerings, their wallet, and their earn program. For crypto investors, this means it's possible for Binance US to shut down. However, Coinbase, which is a heavily regulated, publicly traded company, may have a better chance of defending themselves against the SEC. Down 3% on Monday, following the Binance news, Bitcoin has since recovered, closing up 5% on Wednesday. It's been trading in the upper 20s for about 3 weeks and is currently trading at 28.7K. We think the next levels to watch could be 29.4K for resistance. And as for Ethereum, it was also down 3% on Monday, following Binance news, and has recovered, closing up 5% on Wednesday. It's currently trading at $1,800, and we think the next level to watch will be $1,850, which it has struggled to break through over the last 2 weeks. That's it for this week. Stay tuned with CoinShares for more weekly updates and insights.